What's up, fam? Hope everyone is well. Welcome back to Masterclass Day 7, I believe. Days are flying by, but for today's lesson, we're just going to go ahead and hop right on into it. We're going to be covering market trends, how exactly to identify market trends, see whether price is realistically bullish, realistically bearish, etc. So let's go ahead and hop right into it. Per usual, if you guys haven't watched the previous Masterclass lessons, be sure to go and lock in with all of those. All of them have been absolute gems. So I definitely recommend checking out all of those lessons, regardless of your experience, regardless of if you think you are familiar with that topic that I'm covering or not. I'm confident you guys will finish that lesson being more comfortable with a specific topic, or even I'm confident you guys will finish that lesson with learning something new. So let's go ahead and hop right on into it and covering how to identify market trends. So let me go ahead and do this here. So two or three things that I want to cover, the three main things that I want to cover and that you should realistically be doing when you're identifying market trends is one, just zooming out, just getting a larger overview of things, getting a larger view of things, and not being so zoomed in. And the way that you can obviously get a larger overview of things is by A, zooming out, and by B, looking at a larger time frame. So I would recommend, for me, typically I'm looking at the hour, the 30-minute, sometimes even the daily. And then, if I want to start to lower it down, I'll go down to the 15-minute, the 5-minute. But in terms of, really identifying market trends and just getting a large overview of when I want to get a large overview of things, I will go to the 30-minute. Most of the time, obviously, like I mentioned, daily, hour, sometimes I'll do that. Whatever you seem to work best for you, go ahead and lock in with that. But I've seen the 30-minute to work best for me. So that's going to be number one. The number one thing that I wanted to cover is just simply getting a large overview of things, right? Just not always being so zoomed in, kind of seeing price action as a whole. See what price action has been doing the past couple of days, the past week, etc. Things like that is going to be very important. And then obviously switching to a larger time frame is also going to give you a bigger overview too of how price action has been moving recently. Because on the 1 minute, you're going to get a lot more candles, a lot more price action, and you're not going to be able to really get a larger overview of things if you were on the 30-minute or just any other larger time frame. So you can see here, we're on the 30 minutes, zoomed out, obviously, not so zoomed in when we're taking, our trades. So what we want to do is just simply just zoom out and just get an idea of what price action has been doing. Let me make my camera a bit smaller and just see what price action has been doing as of recently. Like I said, the past couple of days, the past couple of weeks, the past week or so, the past day, we want to get an overview. We want to kind of look at things like that. So that's going to be that. Now, number two is also, of course, going to be understanding supply and demand, right? Supply and demand can give us a huge advantage in terms of understanding the overall trend within the market, right? Obviously, if we get a move into demand and that demand then becomes effective, price is likely to flip, then become bullish, right? And then vice versa for supply. Obviously, if price taps into a supply area, like we can see here, price tap into a supply area and then completely flip to the downside, we started to get that bearish price action. That will also give us an idea that, we'll start to get a bit more of that bearish movement as well, a bearish trend starting to be inputted within the market. So supply and demand is also going to be a huge tool in terms of actually understanding the market trend. And, just to kind of clear up, understanding the trend within the market is going to be very, very important because overall you want to see who's in control, right? You want to see are buyers in control, are sellers in control, because that'll also help you a lot more in terms of your decision making when you're looking to enter a trade, right? Because obviously you don't want to to target going short if buyers are constantly in control, right? If buyers are constantly in control and you see that price is presenting a bullish trend, you then want to look to trade with that buying momentum. You want to look for some type of buying setup to go long, right? So that's also going to be, that is understanding supply and demand as a whole is also going to give you a huge understanding of market trends. And like I just mentioned, understanding market trends is actually important and beneficial for you because you need to see who is control. You need to understand who is in control so you can then use that information to make better decision making moving forward. Because I see a lot of the times you guys are entering short when there are strong buying pressure, or when strong buying pressure is starting to be inputted, you guys are targeting to go short, targeting to take puts, which shouldn't be the case at all. And that's just due to the fact that you guys have a misunderstanding for supply and demand. So also understanding that will let you know, A, are buyers in control, B, or are sellers in control, which is very, very important. Now, 3, which is going to be the third thing, is going to be identifying and looking at our key highs and lows, because our key highs and lows are pretty much key areas, right? That's typically where we see support and resistance areas, supply and demand areas. So when those areas get broken through, when those get invalidated, that typically means that this certain pressure, whether that's buying pressure or selling pressure, is very strong, is excessive. So if that's the case, that's likely to continue then flipping a trend within the market, right? So obviously, let's say that, let's say if price were to approach the supply zone, obviously price coming on into a supply zone, we'd be expecting a move to the downside from the excessive selling pressure. Let's say we didn't get that move to the downside, we got a continuous push to the upside while invalidating that supply. That would then flip the trend within price, because that's letting us know that the buyers were extremely strong coming into the supply zone and the sellers were pretty weak compared to the buying pressure, right? Then flipping the trend within price, then flipping the ultimate mover, which is going to be those buyers, right? So like I was saying in step 2 or number 2, we always need to understand who's in control. And that's why actually understanding market trends are important for us, because it's more than just understanding is price bullish or is price bearish, right? We actually need to use that information to then make better decision making moving forward. So let's say that going back to our key highs and lows, let's say that we have a key high right about here. You guys can see this key high started about right here on this strong push to the downside, and then you can see price tapped into it and then reversed back again. So let me go ahead and mark this out as our as our resistance area. So you guys can clearly see this black line was created right here. You guys can see it got tapped into, rejected here, tapped into, rejected here, while also providing selling pressure, strong selling pressure each time we tapped into that area. So now we know that we have a key high, a key level being created. So this is a key high where sellers are obviously utilizing. Sellers are utilizing this area to push price down from. Meaning that if we do get this move down from this key level, from this area, we're confirming that bearish trend. We're confirming that bearish momentum due to all of these sellers that are stepping in. So now that we have this key high right here, we want to kind of extend it out and see what price does next time it approaches that key high, right? So as you can see here, we approach this key high, pretty much the first candle. It looks like this is pre-market, but it looks like we approach this key high, and you can see right as we approach that key high, we broke through it. We had excessive buying. We had strong buying pressure leading into this level, which initially was what invalidated this zone, broke above it. And then you can see once we broke above this zone, we had excessive buying. Then that flipped the trend within price, right? That flipped the ultimate mover, which was going to be the sellers wanted to typically take advantage of this level, but now this is the buyers. This is the buyers area, so you can obviously see. And then once we broke above this key level, we had a trend flip within price, and you can obviously see that strong move to the upside. Now, let's say that we also have this right here. You can see we have a key low, right? Now that we have this key low, you can see we want to wait until price initially breaks below this key low, right? Because we know that this key low, or not this, this key level. So at this key level, you can see price finally approaches it, and then that's when we get the invalidation and that push below. Now, once we get that invalidation and push below, you can see we're starting to get that flip within the trend, right? Buyers weren't in control as much anymore at this level, right? And now sellers flipped. Now sellers are control. Now the trend has flipped. So this gives us the confirmation and the idea that obviously sellers are in control, and we have more bearish momentum than bullish momentum. And then you can obviously see once we broke through that level, price initially continued to the downside, indicating and confirming that bearish market trend, right? Obviously, then giving us the confirmation to make better decisions moving forward, to then utilize some type of short entry to trade with that bearish momentum, right? We want to see, like I've been mentioning, we want to see who's in control, because whoever is in control is providing that momentum within the markets. We want to be trading with that momentum. And if we're not able to understand who's providing the stronger momentum, then we're not able to make the best decisions, which is the best trades. So that's going to be that. But I'm going to wrap it up here. Just a quick little lesson going over key levels, going over a couple of things, and just kind of giving you guys some pointers on what you should really be looking for when you are looking and identifying these trends and identifying to realistically see, is price bullish, is price bearish, are buyers in control, are sellers in control. And you can also use market trends to your advantage, like I was saying earlier, to take trades. So you can utilize market trends in so many different ways, and they are very beneficial for you. That's why I wanted to cover them and kind of give you guys some pointers if you weren't using them already. But other than that, I'm going to wrap up the lesson here. Much love. If you guys have any questions, feel free to message me in the Discord, or leave a message in general chat. You guys already know the deal. Other than that, I'll see you guys in the next call. Much love.